Good morning, everyone. Welcome to Space Traders, where we love to talk about stocks, space, and especially stocks that rocket into outer space. Today, we're going to be talking about one of our most favorite stocks, one that has rocketed to the moon, come back down to Earth, back up to the moon, back down to Earth, and now we think is ready to take off past the moon and head straight to Mars. Yes, we are talking about Tesla today. Now, I know we've been talking about Tesla here for a long time, especially in our Space Traders group. We've been extremely bullish about it, and we know there's plenty to be excited about this company over the next 5 years, including the Cybertruck rollout, new battery technology, Tesla Semi, the cheaper Model 2, battery storage, solar, disrupting the electric grid, you name it. But today, I want to focus on the big changes that are just around the corner, changes that I believe will rocket Tesla to well over $1,000 per share by Q4 of this year. Don't worry, we'll keep this video short and sweet, but what we'll do is we'll go over the five key reasons as to why Tesla is a buy now, obviously review some of the risk with it, and of course, we're gonna take a look at some fun charts. So let's get straight to it. So let's get straight into the 5 reasons we think Tesla is a buy now. First and foremost, the current price and the recovery we're going to have from that mini stock market crash we just had. Tesla is super cheap right now, and that's because we just went through this mini crash where everybody in the market was really concerned about the increased rate in the treasury bond yields, potential inflation, and concerns about the vaccine rollout. But I think we've gotten past all of that, and we're starting to see the market recover from that. And now we're seeing inflation recovery, economic recovery, pandemic recovery, the stimulus. Everything is pointing towards the trend line going back up now that we've gotten through some of those brief scares that everybody had in the financial market. So that's number one. Number two, I mean, Tesla's proven over this last year that they are a resilient company. In the pandemic, not only did they survive, but they also thrived. Seriously, I mean, can you think of anything that could torpedo a growing company more than a pandemic disrupting the economy, the supply chain, demand, right? I mean, if we're talking about world events that could really screw over a company, we had one. And guess what happened? Demand increased. They couldn't build cars fast enough. They continued to innovate and expand their footprint. I mean, hell, despite over hundreds of EV competitors in China, Tesla, an American company, is the #1 selling electric vehicle in China. That's insane, right? So if they can survive that, I think they can survive anything. Number three, the Biden administration. Now, I know Slow-Mo Joe, as we call him, has been kind of not as quick out of the gate as we all hoped. He took a while to get the stimulus package passed, but it's finally passing, and I think the House is voting on it today after the Senate already approved. So that's great news. And then, of course, his focus has been obviously on the pandemic, vaccination rollout, and increasing distribution and whatnot. And it looks like that's starting to ramp up. So what does that mean? Well, he can start finally working on some of the other promises he had. We know that Biden is extremely green energy and EV friendly. And our expectation is that he's going to focus on those measures and initiatives by this summer at the latest, including the increase in the tax rebate for electric cars, investment into the development of technology, and just the overall commitment to green energy, electric vehicles, and that transition into electrification. So Biden, if nothing else, is going to support that, unlike the previous administration, who was still big friends with oil and legacy car companies. And despite all that, Tesla thrives. So imagine what's going to happen when Biden and his green initiative starts rolling out by this summer. Number four, I mean, at a minimum, just as a car company by itself, Tesla, by the end of this quarter, is going to have 4 operating factories. I mean, it's not this quarter, but by the end of the year. They've already got the Fremont one here in California, China's opened up and rolling out, but expanding. I mean, they were only operating at 1/3 of their capacity. Gigafactory in Germany is almost open. And of course, the Gigafactory in Austin, Texas is scheduled to go online by the end of this year as well. So even at a minimum, if nothing else awesome happens, they're going to increase their car output substantially with all these new factories opening by the end of 2021. Now, with just one factory essentially and a little bit of China in the second half of last year, they were able to produce 500,000 cars last year. And the prediction is over the next several years, each year, they're going to increase that output by 50%. So by the end of this year alone, the amount of cars Tesla is producing and sending out to the market is going to be much bigger than anybody else. Well, it currently already is, but it's going to be even more. They're going to expand their lead even more. And the crazy part is they still can't keep up with demand. The amount of people on waiting lists for cars from Tesla is absolutely ridiculous. So every car that is produced and done is immediately sent out to a customer. There's just no inventory sitting around. But I saved the most important reason to buy now for last. Our fifth and final reason why we think Tesla is going to rocket to Mars this year is autonomous driving. And what is autonomous driving? It's the convergence of robotic tech, software, and artificial intelligence. And we believe that that convergence is going to create a market boom and growth unlike anything we've ever seen. Okay, this is the next to the moon to Mars moment that we believe that most investors don't even realize yet, especially institutional investors. Certainly all the investors that still think of Tesla as a car company as opposed to a software and technology company. And of course, the media isn't really talking about it yet. Autonomous driving, full self-driving, as Tesla likes to call it. But if you think about it, autonomous driving is really opening up at a minimum two brand new categories for Tesla. First is the software sales, which is really transportation as a service. And if you think about it, when you have a car that can completely drive itself and drive for you, why would you want to drive, right? Why would you want the distraction of having to focus on the road when you can either watch TV or be on your phone, get some work done, take a nap, whatever it is? We personally feel that transportation as a service is going to be a game changer and that people will sign up for it. And whether that's a subscription fee of $100 a month or $150 a month, we're very confident that once car owners realize that it's easier and more convenient for them to not have to drive themselves, but just sit and relax in their car and let the car drive itself, why not? Why not? I certainly would rather do that than have to sit on the road and focus every time. I mean, I'm one of those people that if my cell phone, a text message comes through or an email comes in, I get a little bit of that anxiety. I want to check it. So I wait for a red light to be able to check it. Or sometimes I love freeway traffic because if there's traffic, then, I'm stalled for a while and I have time to take a look at messages or whatever. And I'm sure a lot of you folks are the same way. I mean, the number one reason why people get into car accidents now is not because of driver error. It's actually driver distraction. And so autonomous driving, full self-driving immediately takes that issue out of play. And I don't see why anybody wouldn't want to do that. And Tesla's already reported that, once they transition into full self-driving, the margins on the software side of this is ridiculous. Right now, the profit margins on a car just selling the electric vehicle are about 25, 30%. But margins on autonomous driving skyrocket all the way up to 80%. 80%. And we feel that transportation as a service by itself is $1 trillion market cap. It's a whole new category that no one's ever done before, right? Selling software, selling a subscription fee to have automated driving. Now, the more important thing about automated driving is the potential for robotaxis, which Elon has already discussed ad nauseum about. But this is essentially a goodbye to Uber and Lyft, right? So if you think about that, if you can get a car to come pick you up and take you wherever you want, and it's going to cost 1/5 of the traditional cost of an Uber and Lyft and be safer and private, why wouldn't you do it, right? So you want to talk, we already know that the rideshare industry is a multi-trillion-dollar industry. So with Tesla and their onslaught of robo-taxis, they're going to be so much more attractive and so much better. It's going to be insane and a game changer to the industry. Now, if you're worried about everybody else, well, Tesla is already way ahead of everyone else. I mean, AI is really powered by data. That's what makes it work. And Tesla has billions and billions of miles of driving data already from all the cars that are on the road and all the data is collected with that. Second place right now is just Google with less than 10 million miles, and they have limited cars all across the country driving around and mapping out the country. I mean, this is a bet on the FSD tech. This really is. And as you know, for those of you who are familiar with the Tesla Autopilot, that went very well. I know there were some hiccups when it initially launched, but after a couple of years, Autopilot is smooth. Everybody loves it, especially when they turn it on the highway. There's been no more reports of any problems with Autopilot. And that's because of the increased data and improvement in technology that Tesla has done over the years. And here's the exciting thing. Tesla's already announced, Elon announced that in April, next month, he's going to have a wide release of full self-driving beta, FSD beta. It's insane. I mean, this past October, he did release FSD beta to owners that were registered in an early access program. And the reviews for that were phenomenal. These owners that used it could not believe what the car could already do. In fact, some of the most world-renowned engineers came in and had a chance to test out the Tesla FSD. And they all stated how amazing the technology was. And granted, this is before it's actually fully ready to launch. Now, I know, yes, LiDAR is another version of autonomous driving that's out there, and it's pretty awesome. Cruise and Waymo already have self-driving vehicles out there. But the reason the media hasn't talked about them much, the reason you haven't heard about them much is because, you know, the LiDAR vehicles are only working in a limited pre-map geofence area. And Tesla's underlying tech is really designed to put the car anywhere and to be able to go anywhere. And that's where their data reigns supreme. So the release of the FSD beta is basically to prove that FSD is safer than any other human driving condition. And really, once that happens, it's game over. Absolutely game over. Proof is already in the improvements that they've made on the Model S and X when they did that refresh here at the beginning of the year. For those of you that are familiar, the exterior included more cameras and more sensors, and in the interior of the car, they redesigned it really to entertain people. They switched their infotainment system screen to be a wider, bigger screen, and the infotainment system itself is as powerful as a PlayStation 5. It's insane. I mean, this thing is designed to entertain and to capture people's attention. I mean, if you want to talk about distraction, that is the ultimate distraction, and you're not supposed to be driving when you've got all these awesome features on. So basically, Elon is ready to go. Now, I'm not saying that FSD is going to be ready to go publicly by the end of the year. No, not at all. I think we're still going to be in beta mode for a while. But because of that, what I'm saying is, and what we're predicting here is that by Q4 of this year, the market, the investment community, and the media community will finally see and understand what the potential of this technology is. And this oh shit moment will finally happen, right? Think of kind of when the iPod then went to the iPhone. That's how big of a change autonomous driving will be. And the realization of how big that market is and the potential of what it is insane. And while we're still betting that Tesla will get the technology right, I think once people start seeing and talking about the testing and the beta technology that's out there, everyone's going to realize, holy crap, this is much bigger than just selling electric vehicles, much bigger than just selling batteries. And that moment will then, we feel, create a huge spike in where Tesla's forecast is going to be. Now, of course, yes, there are a ton of risks. There's always risk with investing in a company like Tesla. First and foremost, overvaluation. Yeah, I mean, if you think about it from a traditional and technical analysis, Tesla is overvalued. But we've seen over the past several years, we can't use those type of financial metrics to judge Tesla. People are betting on Tesla for not what it is today and not really what it is tomorrow, but what it's going to be a few months from now, a few quarters from now, even a few years from now. And so why we think, why we know based on paper, Tesla is technically overvalued. Once people realize more of the potential it has, yeah, it's one of those. Another risk, well, the man himself, Elon Musk. I mean, between his dumb tweets and just silly things that he does. I mean, his actions, he has so much influence, and his actions will cause the market to move. I mean, if he wants to talk about Bitcoin, boom, it spikes up. But if he does something silly and dumb or say something bad, those dumb tweets will knock the price down a little bit. But what we do know about Elon Musk is that, when he makes dumb tweets and does stupid stuff like that, it has nothing to do with the company. It doesn't affect the design of the cars, the technology, the model, and the plan that they have forward. Another risk. Well, I mean, this is another Elon Musk issue. I mean, when we talk about influence, it's not only his influence in the investment community and the media market, but it's also his influence in the company. Can you name a more famous CEO of any company? So as well as he does, so does Tesla. And so whether it's his health, his state of mind, those type of things, God forbid a terrible accident or something happens, Elon has such a big influence on the company, and we haven't seen what Tesla can do in the event Elon Musk is gone, right? It's not like Apple. Apple's proven after Steve Jobs, we got a new CEO and it's fine. Obviously, Amazon's got a new CEO. Disney's gone through different management changes and they continue to thrive. But we don't know what Tesla would be like without Elon Musk. So for those of you nervous about this, find a way to put some bubble wrap around Elon. Make sure he's eating healthy. We want him around for a long time. And then, of course, finally, the other really big risk with Tesla is how volatile it is. I mean, we're making a lot of bets on its future technology, and so far, Tesla has delivered. But with these big swings, it's the main reason why we've always talked about going long on Tesla. I mean, you should not be investing in Tesla if you need to cash out next month. But the one thing that we also know about its volatility is that it's survived that. So despite the fact that Tesla will crash hard when there's a lot of volatility in the market, it will recover. I mean, if you remember when Tesla pre-pandemic, where it was sitting around 900, and then the pandemic happened and everybody freaked out, it crashed all the way down to like $300 a share. But as you've seen, not only has it recovered, went above its pre-pandemic price, then split, and then ultimately went up almost to the pre-pandemic price again. It's insane. It's been great. So let's go ahead and go to the chart so we can see how that looks. All right, so if we take a look at the chart, this is our most accurate chart from yesterday after closing. You can see that Tesla yesterday had a big gain yesterday with the strong overall market recovery. It's still about 30% down from the previous highs, but you can see that the RSI is pointing up, OBV is pointing up, MACD is pointing up, there's positive volume. And then, the other thing is, there's no risk of any earnings news anytime soon to upset. That's all still quite a ways off. So you can see here that, the recovery looks pretty good as far as where the resistance area is and what we have to expect based on what it's done over the last several months here. But if we go ahead and look at our forecast chart, let's take a look at that. Now, our forecast chart is even more exciting because if you take a look here, you can see the basic major ascending line that we've set up. And if you look at this line, if you follow this, based on where it's going, we can expect the stock to hit about $1,000 a share by the fall, just right before Q4. But here's the interesting stuff. Now, if you look at how over the last several months, you can kind of see how it's gone, especially with the various corrections, right? Every bullish correction you've seen, there's been a recovery that's actually quite steep, right? And so if you use the same angle of recovery on each of the bullish correction patterns, then we're going to take a look at potentially up to $1,000 a share by early summer. Now, of course, that's extremely aggressive, but based on what we've seen over the last 6-7 months, it's certainly not outside the realm of possibility. So at a minimum, we do have some charting to justify some of the predictions that we have, and that's along with obviously the news that we've shared before. The important thing to realize is Tesla is a unique opportunity unlike anything we've seen in stock market history. And we were blessed with an opportunity given this little 2-week instability in the market to see the price drop back down to an affordable number. And so while I'm not necessarily sure if this baseline of $600 a share is really the floor, I mean, we did see it last week go as far down as 550, 530. So, you know, if there's anything that may disrupt the recovery this week, that brings it down again. But we certainly feel that over the next several months, once things start to fully recover, we're going to trend all the way back up. And so Tesla is definitely a recommended and a recommended buy. It's a strong buy for a good return by the end of the year. And certainly it's still part of our long-term play. But this is probably the last chance you're going to get to where this price is as low as it is. So if you've been waiting to get in on Tesla and you couldn't do it when it was at $800 or $9 a share, well, at 600, now's a chance to do it. And whether you do it buying full shares or you're doing fractional shares, get into it as soon as you can, because we are confident that once all the news and realization about full self-driving and autonomous technology is out there, that's it. Game over, to the moon, and it's not going to come back down. So anyways, that's our video for today. Be sure to like and subscribe. It helps us out. And of course, if you have any comments or questions or concerns, drop them below. We answer every single question that you guys have. We're here to help. We certainly appreciate all the support, and we'll be having more awesome content out to you guys later this week. All right, so have a good week, and may the force and profits be with you guys. See you later.